Hello everybody and welcome back to another video. It's been a little while here. This one is going to be on ACIC or Archer, ticker symbol, or I already said the ticker symbol, Atlas Crest Investment Corp. I did two videos on this previously, one on my bullish thesis and then one about their lawsuit that is filed against them. And this is an update on what is going on with the stock currently. So thanks for tuning in, and without further ado, let's hop right in. The stock has been kind of barcoding for a while. We can see here they're not really sharp lines. A lot of them are flat. They'll stay there for a while, go back down. This could partly happen just from lack of buying or lack of buying or selling pressure at a certain price. It may get to a certain price and then people may not even trade the stock for long amounts of time, or some like to think barcoding as manipulation, keeping the stock artificially low so that people can really load up on it while it's cheap and reap the benefits once it finally goes above $10 and starts to really start gaining in price. We can see here over the past 6 months, it started off at $10 like all SPACs, or most of them, if not, and then popped all the way to $17 in February 18th. So it has since fallen back down to $9, almost a 50% decrease. And the reason it's fallen is kind of a nuanced and variable approach, just because most SPACs peaked in February and a lot of them took a risk-off approach. A lot of them had gained 100%, 50%, 200%. So a lot of people had very, very nice gains. And as the stock market became more risky, people wanted to take off more risk, so they said, what's my most risky investment? They said, oh, probably a lot of these SPACs that are pre-revenue, and some of them are even pre-sales, as this one is, and they said, I'm just going to take my profits. I have nothing to, there's no reason I shouldn't take profits. That made a boatload of money, and they sold off, and they have, a lot of them has since yet to recover. Some are starting, they're making the way back to their previous prices, but a lot of them are still relatively cheap to where they were back in February. Right now we can see the market capitalization is $620 million, so it's not even a billion-dollar company yet. If you watched my first video, you can say, or you'll be able to know that they already have $1 billion worth of sales, though these sales are not completed since they have yet to deliver their machinery to their customers, which the customer is American Airlines, quite a notable and big name customer who believes in this company. I would think that if they're investing $1 billion in this company and buying $1 billion worth of their product, that they would do their due diligence and research and think that this is a real thing. As many don't believe that it is. They have their doubts, and that is why there have been some lawsuits. I talked about in the second video their lawsuit of people claiming that they stole design elements and the actual full-on electronics from Whisk, the former employees who used to work there. But this will inevitably lead back to the employees and not the company itself. So Archer itself is in a great position, and they have actually announced, not in this news here, but if we look it up, Archer counter suit. They are filing a countersuit against Whisk, who sued them over their designs of their electric helicopters, because they said it was too similar to theirs. We look at the article. It says Archer countersues Whisk, calls case baseless, saying that basically there's nothing to go off of here. So if we look at the article, Archer asked the judge to throw away Whisk case, calling it entirely baseless. This is a lawsuit entirely without merit and was filed for an obviously impermissible purpose to impede the runaway success and investment in Archer and its state-of-the-art aircraft. So Palo Alto, California-based Archer says that the court filed papers June 1st, so that was just 3 days ago. And that's kind of what I said in the video, that even if it was to be led back that they did steal the designs, that it wouldn't lead back to the company, it would have been the individual workers, but they are completely backing up the fact that they didn't even just steal the design flaws and that they are just trying to hurt the company and basically help the shorts out by keeping the stock artificially low. But in our case, this is creating a great buying opportunity because there is a huge PR event coming up just within a week. It says Archer announces unveiling of eVTOL aircraft. Urban air mobility leader will reveal its electric aircraft in an event at Los Angeles via live stream on June 10th. So that's coming up within a week. That is a really, really, really big catalyst for the stock. So if you have been looking to buy into this stock, you might want to do some more research before buying it, but that could be a great catalyst to push it over the peak of $10. Because when we look here the past month, it's kind of just been hovering around 980 to 990 something, and it's just been range bound throughout there for the past month. It hasn't been able to do anything. I will note as my last kind of footnote in this video that Cathie Wood has been buying up this stock quite frequently. I think she's bought at least 3 times within the past month or two, which is, I won't say it's bullish or bearish, but if you are a fan of Cathie Wood and you think that she makes good investments, then you might want to tail her on this investment. But I will say, just putting out there, she does make some investments as cash holds. She says, said on statement saying that she buys Apple or some of the bigger name tech companies because they are good places to keep cash when she doesn't have a stock to buy that she is really, really bullish on at the moment. And you might think that ACIC isn't quite one of these big tech giants, but since they have yet to merge with their company and it is a SPAC, they have a SPAC redemption. This can be used as a savings account essentially for Cathie Wood, who might not have enough stocks to buy with all the inflows that she has because she runs an ETF and she can't hold cash on her balance sheet. She has to buy stocks with every single dollar or currency that comes in. She has to buy a stock with that. She can't keep cash on hand. So she will buy just sometimes into stocks as cash-like assets. And these will actually turn into small interest or small savings accounts because anything under $10 could be redeemed for for $10 once the merger goes through and you're unhappy with the company. It could also be a very bullish signal if you believe that she believes in the company, but that's kind of a little bit too cloudy for my judgment, and I am more bullish on the fundamentals of the company, not another investor out there. Which that's my own personal opinion. You should always be focused on the fundamentals of the company, not really what other people are saying about it. But if you made it this far, thank you for watching and have a great day.